Good afternoon, everybody. I'm Pierre Roberge, the Daily Trader. It is 12:30 Eastern Time PM. Is it PM? Yes. PM, because I'm always mixed up with 12 a.m. and 12 p.m., which is which. 12 p.m. and we are going to take a look at Tesla, Palantir. Yes, my friends, we are going to look at Palantir today. We are going to look at Dow Jones, S&P 500. We are going to look at Nasdaq Composite and Nasdaq 100. We are going to look at all of that. And this is all free because once a month I do this free. I do this weekly live free because it's close to the 1st of September. So this is now free. Did I say free enough time? I guess so. So it's free, but when we are not during the 1st of the month, then this weekly live is only for my members. So let's just jump right ahead and look at let's look at Tesla first. And if you have any comments or questions, feel free to write them here, and I will answer them live. So Tesla had a split. When did we have the split? On the 25th of August. That was Wednesday or Thursday, I think. So the stock divided by 3, so you have 3 times more stock. I was in Tesla at the split because Tesla was in a decent position right here. It was in a decent position. So Tesla. And I'm going to recap a little bit because we might be having some new people here today because this is live. So I'm going to recap a little bit. So we are in a congestion zone with Tesla. We have 2 new numbers because we all have to change our numbers because our trend lines and resistance lines are not in the same place because of the split. So we have a support at 280.55 and we have a resistance at 314.17. So the stock's job is to zigzag between these two. And once it zigzags between these two, then it's going to have to make a decision to go higher because there's more buyers than sellers, or go lower because there's more sellers than buyers. At that point, as technical analysis people, we are going to follow the herd. We don't try to predict what is going to happen. We don't have to predict because we watch the stock every single day, contrary to people that buy Tesla at 288, long-term investors, and they think that, and they might be right, and they think that Tesla is going to be worth $2,000 in 2030, which is a interesting hypothesis. So these people will just buy now, and they don't have to look at anything else. Since we don't predict, and since we don't have that long term of a span of investment, we look at it every single day, and when we see a significant move in the market, we jump in and hop on that move. So this prediction thing is not necessary. It's necessary when you buy something at 288. Don't look and then hope that in 8 years it's at this price. Then you need to predict that it's going to be at that price. But we don't need to predict. So the prediction, we don't have that burden of prediction. We just have the burden of pattern recognition. Pattern recognition, because stocks move in patterns. They don't move randomly. If they moved randomly, it would be something else. But things move in patterns. So sometimes the stock moves down, and there's a pattern, a downtrend, and sometimes within that you can have little patterns, uptrends, and you have some patterns which are just going nowhere, going sideways. So we have a little sideways pattern right here, and we had a little bullish pattern right here. So, and we just identify what is the pattern, and we identify the boundaries of a pattern. As I just mentioned, I think I have not explained this better than what I'm doing right now. I'm sorry, but I think this is pretty good. So right now the boundary is 280.55 and 314.17. So the stock is giving us a boundary to look at. And once the stock is going to break that boundary, it means that the stock is significantly stronger than it was when it was here. So it's stronger. More people are coming in. We don't need to know who. We don't really need to know why. We just need to know that, well, there's a crowd of people getting the stock up, because sometimes you have institutions that have billions of dollars that are investing in Tesla, and they might make this decision, and they are so huge, they are whales, that they are going to influence the stock. And we don't know why they decided to invest, but we see the effect that they are having on the market, and we just hop on and follow that effect, and we profit from that effect. So we don't have to predict. We just have to be there like a leopard looking at a antelope. He does not know when the antelope is going to pass in front of him. He does not know when. Well, yeah, it's going to pass in front of me tomorrow at 12:30. He has no clue. But he follows and he looks at the antelopes, and when there's one that comes close, then he jumps in. That's it. So no prediction is necessary. So that's what people that are fundamental investors have a hard time getting their heads around. We don't need to predict. Okay, so enough preaching or ranting. So Tesla was also, and there are multiple patterns. Stocks do multiple patterns. So I said congestion zone is one thing, and then there's a wedge pattern here, and we broke outside of this wedge pattern yesterday, Friday. We broke outside of it. No stochastic. So as we all know, people that are listening to my channel, we know that this is going down to at least 280.55, and it could go lower. So what we are going to do today now is look at the weekly chart. So we can look at a stock chart on the daily chart, on the weekly chart, on the 5-minute chart, the 1-hour chart. And if it's a daily chart, then one candle equals 1 day. And if it's a weekly chart, one candle equals 1 week. So if we look at the weekly chart, this is going to give us a longer term view of where Tesla could go. There, that's quite an introduction. So let's do this right now. So Tesla right now, I'm just putting some trend lines on the daily chart. Okay, so this is the weekly chart. So we had this move up right here. We are encountering pretty much the same, and I'm going to transfer these lines here. So this line is still going to be useful for us on the weekly, and that line too on the weekly, like this, boom. So yeah, we are still in this congestion zone from a weekly chart perspective. What's a little bit disappointing is that from the weekly chart perspective, we don't have stochastic over 60. We need stochastic over 60 to have a significant move up. If not, it's just a fluke. It's just a move up. That's just a fluke. Look at it everywhere. If you want to see where Tesla is moving up, you look at stochastic over 60. Here, if you had bought here, September 23rd, 2019, and if you had sold, and you can sell before, but at the worst, if you had sold right here when we lost stochastic over 60, you would have made money almost double. If you had bought here, April 6, 2020, when stochastic became over 60, and if you had sold when it stopped, you would have made, from $29 to $200. You would have made 10 times. You don't need to be smart for that. You just need to watch and obey. And that's hard. That's hard to obey because we like to be smart. here, and if you had bought here, stochastic over 60, July 12, 2021, and if you had sold here, you would have made, you know, from 198 to 288. It's not bad. Here you would have lost. It happens sometimes. It happens sometimes. So stochastic became over 60 at 358 post split numbers, 358, and then it went outside of stochastic at 333. So yes, you would have lost there. It happens. Here you would never have bought because stochastic never went over 60. So I'm just showing you to show you that, you know, it works. So this is why we use stochastic over 60 as one of our main indicators. So we don't have stochastic over 60 on the weekly chart of Tesla. So this move up by Tesla, based on our definition, this move up in Tesla is a fake move. So Tesla should be going down. And apparently, coincidentally, Jerome Powell is kind of helping us because what he said on Friday, is, well, no, we need inflation at 2%, and I'm going to do whatever it takes to make it so, even if it hurts. Bang! So it's as if he's looking at this and helping us because so weekly wise, Tesla is not in this bull trend, is nothing, and daily wise, there's no more bull trend, and even on the hourly chart wise, there's no bull trend. So short term, Tesla is not going up, and longer term, it does not look like it's going up yet. So the antelope is not near us. Boom, that's it. And since we are close to the end of the month, we can look at the monthly chart. Monthly chart either. We don't have stochastic over 60 in the monthly chart. Look at this here. Last month of July, we had this big move up. Yeah, Tesla is bullish again. Yes, it's bullish. Let's look at stochastic here. No. Stochastic at 58. No, it's not bullish. And what's happening? Well, it seems like we are going to go down. So yeah, so stochastic is really important. This is why we are looking at it. So there I said it. All of the time frames of Tesla, so far it can change, but so far it's not there yet. So if you want to go long, wait a bit. Wild then free, I like that. Is stochastic better on hourly or daily? What's the best when looking at stochastic? Well, I find that the best stochastic first, this is what I need to tell you first. I use a 21 period stochastic. So it's 21 day when I look at the daily chart. It's 21 hours when I look at the hourly chart. I look at 21. And so that's the main difference. So I'm not using the regular stochastic, which has a 14 day. So I was very pleased to see that, you know, I chose 21 because of experience. And I was very happy to see that I saw and I should find it because it's really interesting. There was a scientific study that back tested all of the different periods of stochastic that you can use, and the 21 period stochastic is the best. So I was happy to see this because this was exactly my experience. So I use the 21-day stochastic. I don't use the moving average that is sometimes plotted on top of it. I don't use that. And that's a 3-day moving average. So, you know, this one I'm not displaying, so it does nothing. So I just use a 20-day stochastic, and I changed the style of stochastic so that I have an upper band at 100, a lower band at 60, and that band being green. So this is why, and the K, and I'm just plotting the K. I don't plot the D I was talking about because the D does you know, a little bit of a 3-day moving average on it. I don't need that. So I don't plot this, and I just do it like this. And when stochastic goes in the green, this is one of our signal. When stochastic is not in the green, we should get out, or we can short, or whatever. Thank you for your question. What do you think about an average price? An average price of 249. So you are talking about dollar cost averaging. So you are buying Tesla as it's going down. Personally, I don't believe in that. I prefer to let it go down and sell when it's up, let it go down and buy back when it's low. This is what I do. And yes, it's timing the market. And yes, it's possible. But you need to look at it closely. If you don't look at it closely, it's hard. But if you look at it closely, like I said, it's possible. So average price of 249. So your 249 is approximately someplace like here. I think you're not too bad in terms of, you know, here we have a congestion zone here at 255. So you got in at 249. So the move down that we might be seeing with Tesla might be bouncing on this. So you should be okay, or it should be bouncing on 255, which you should still be okay. It could still bounce anywhere it wants, but the probability is that maybe it's going to bounce a little bit higher. So you could be okay. I don't know, but you could be okay. Because I don't think, you know, I don't think the same way. I was in Tesla at 888, which, you know, I would need to do the math divided by 3, but it was approximately here. So I got in here because it was moving up, and now I sold this week here. So I made money from here to here. So now I'm out of Tesla. So I don't care how far it goes down. Well, in fact, I care a little bit because I just bought a few puts. I just bought a few puts because I saw the weakness on the daily chart. I saw the weakness on the hourly chart. So I'm gonna profit from that weakness. So now I'm in a position where I'm making money when Tesla is going down. So, and thanks to Jerome Powell, he changed the course of Tesla short term on the 1 hour chart, and also changed it a bit on the daily chart. So thanks to him, he made the market make a significant move in one direction. This is just the start of the move, but it's a significant move in a different direction. So I placed my chips on that, in that direction, and I'm gonna see where it leads me. You know, if Tesla bounces on 285, I might make $100. If it bounces on 280, I might make $500. If it bounces on 266, I might make 1,000 or so. If it bounces, you see what I mean? So this is a different thinking. Instead of, well, I'm always in position, it's I don't care which way the wind is blowing. I have a sailboat, and I'm gonna put my sail in the wind. And if it stops, I'm gonna look at the wind. Okay, it's in that direction. I'm gonna put my sail and I'm gonna go. That's it. It's not a I know this is a long answer, but this is not a you know, we have a number in mind and we have another number in mind. It's not a numbers game per se. It's a current. The current or the wind is this way and the wind is this way. So, but okay, if I try to come back to your question at 250. I think this is a nice number because we have a nice, you know, we have a nice support here at 255. So you could be okay. Okay, so let me just get rid of these things a little bit. Okay, what do you think? Okay, is it probable to fill gap at 250? Yes, it's possible. It's possible. Gap fills, not all gaps need to be filled. If you have a company that is suddenly becoming very strong, it might make a gap and never come back to that gap. I can show you gaps in Tesla that are never going to be filled because they are at this level. So gaps don't necessarily need to be filled. Gaps are filled when there's a weakness in the market. So here we have a weakness right here. So in this case, we could get filled or we could get up to 255. So it's possible. No problem, Alan. Is gap filling something that, no, it does not always happen. Let me just show this. What gaps do you see fill in the next couple of weeks? This is the prediction thing again. I don't know. I don't predict. If it comes down, I'm going to see the stock coming down and I'm going to position myself to profit from this downturn. And when it stops, wherever it stops, soon, later, I don't care. If it stops and starts to go back up, I'm going to position myself. So I don't need to know how far is it going to go. I just need to be positioned in the new direction and just follow. So I don't know. Okay, so thank you for your questions and comments. I appreciate them. Okay, now let's take a look at Palantir. So Palantir is another stock that I look at. So every single day I do a technical analysis for Tesla and Palantir, and we check it every single day with each new candle on the daily chart. What is happening and what is happening to our indicators, and what does that mean in terms of our support and resistance every single day. And this is all free. This is on my YouTube channel. And we also check at Palantir, a company that has a lot of potential, but has been coming down a lot. So we still made some money here on this way up, and now it's on its way down. So Palantir is just dropping like crazy. So this is the daily chart right here. I don't have much to say. This is all super negative. Weekly chart is extremely low also, so no indication on the weekly chart that things are starting to turn around. And we still don't have much of a monthly chart because the stock has IPO'd in 2020 only. So we were looking at this resistance right here to see if we were going to break it. We almost broke it in, is it July? Yes. We almost broke it in July. We were extremely close to breaking it here. And in August, we came outside of it, that resistance here, but we are closing below it. So there's no indication, even long term, that things are going to go better. So Palantir for us, we need to wait until the wind turns around, because this is utterly crap, I'm going to say. Okay, and another prediction question. I'm sorry to harp on you. Where do you see the price going in the next 2 weeks? I don't need to see the price go anywhere. I'm going to look at it every day, and when I see a change in direction, I'm going to hop in. A change in direction is a break in support, so that's a shorting direction. Or a break in resistance is a long direction. So I don't know, and nobody knows what is going to happen in 2 weeks, and we don't need to know what is going to happen in 2 weeks. We just need to be there when it happens. So I'm sorry, but I cannot answer that. You're from Montreal. Can you be my trader teacher? Well, as a matter of fact, Alan, well, I'm from Sherbrooke. I have it here, so you can look at my, well, you can look at my what's it called? You can become a YouTube member, and I have different tiers, and I have a one-on-one personal coaching tier where I spend 1 hour with you and you lead. So you lead, you ask me what you want to ask me, and we are on a Zoom call, and we share a screen. And if you want to learn how to draw trend lines, I'm going to show you, and then you can take the mouse and try it, and I'm going to tell you no, yes, this is good and everything. So if you want to do that, there is a possibility. It's not cheap, but it's a possibility. Okay, so did I say everything about Palantir? Well, Palantir is in the tank. Next stop, there's a support at 750, so maybe it's going to stop at 750. I don't know, but maybe it's going to stop there. If it does not stop there, it could stop at 640. So these are the milestones. And when Palantir is going to go up, we are going to know, because a change in direction of a stock is told to us by stochastic. So stochastic is telling us when a stock is changing direction. In fact, we are going to look at stochastic, and when stochastic is going to be over 60, we are going to hop in. So it's not hard, actually. It's not hard. Okay, let's look now at the VIX. So VIX is something that we are also looking at. So the VIX is the volatility of S&P 500. So they are analyzing the premiums of options, and there's volatility is implicit in the pricing of options. I won't go into that, but basically, when the VIX is going up, the stock market is going down. That's it. So we had a nice downtrend since June. Since mid-June, the VIX was coming down, so the stock market was going up. So if we go here, Tesla, June, where's June? Yeah, June here, June 15th, we had the exact opposite. But now, during the past 5 days, look at what's happening. The VIX is coming up, and look at last Friday. How high did it come up on Friday? Super high, super fast, boom, like this. So this is not looking good for the stock market, because and we saw what happened last Friday. Well, on Friday. So right now we might be seeing the beginning of a trend here, a new trend up. We had a trend down here, it was coming down, and now we are seeing a trend up. And a trend up moves like this, it's gonna move like this. So we just saw the first step. So this is of concern, and this is confirming to me that Tesla might still be going down this week. And the other thing that's confirming this, as I said, stochastic over 60. So here we had stochastic under 60. It did this. Now stochastic over 60 is doing this. So everything is correlating. Everything is correlating. This is also called, I think it's called, or I call it, the fear factor. So this is the fear factor of the market. The more the fear we have in the market, and the more people are getting out of the market because they don't want to lose money. And you have those that are buying the dips. And yeah. So basically this is going up. So this is the daily chart. Let's look at the weekly chart also. So just like for stocks, a weekly chart is giving us a broader, a longer term perspective. So longer term, so from a week perspective, we are still okay. So because the weekly chart does not have stochastic over 60, so So what we are seeing on the daily might just be a daily fluke. So it might last for days, but it might not last for weeks yet. So like I say, one candle does not make a trend. So from a weekly perspective, we have only one bad candle, and we had all of these nice ones. We have only one bad. So far we cannot conclude from a weekly perspective that the market is in a downturn. From a monthly perspective, we are still not in a so from a weekly perspective, we are not going up in terms of the VIX yet either. So this is telling me that maybe this is just a something that will last days but not weeks or months yet. Okay, so let's look at Dow Jones. So Dow Jones, this is also impacting the stock market. When the Dow Jones is crashing or the S&P 500 is crashing, then people that hold the stock get scared, and they have good reasons. So Dow Jones Industrial Average, we have been since January of this year in a downtrend with Dow Jones. We were in a downtrend. We knew we were. And we almost got, and sorry, we had this little move up. Within this big downtrend, we had this little move up. Boom, 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 boom. It's coming, it's coming. And we broke outside of this resistance one day. Second day, we were right smack on it. So this is why I'm telling people that don't believe in technical analysis. Well, it's just because you are not observing well, because stocks and indices behave and they react on those lines. Touch here, here touching. Stock is reacting. Sometimes it's not super close. Well, it's pretty damn close, but it's not perfectly close. But most of the time it's perfectly close. Perfectly, it's hard to be more perfect than that. So this is the proof that technical analysis is working, because if it was not working, the stock would not be stopping exactly at the same places where you can draw a line. It would not do so. So basically, we were going up since mid-June. Look at this. June 16th. This is when VIX started coming down. Dow Jones started coming up, and now it came up to this resistance right here. It broke it one day. So breaking a resistance one day is nice. It's sometimes good to wait for a 2-day break. And then the 2-day break did not really happen, and then we started to go down. So now, now we are still in this broad upper channel. So this was a dramatic impact. So we might still be going up a little bit like this. If it does this, we should still be careful, because it can still encounter the same resistance again, not long in the near future. But if we break this here, then we are going to enter into a downtrend. So that's the daily chart. So the daily chart, no stochastic. So we can still bounce on a support if we don't have stochastic, but this is a lot of details for people that are new here. But so just remember no stochastic for now. Let's look at the weekly chart. So on the weekly chart, we had stochastic over 60. So we were hopeful that we could have broken this downward resistance, the same one. But now on the weekly, we have stochastic below 60. So that's not good news. So bearish on the weekly chart, bearish on the daily chart. and bearish on the weekly chart. So the prognostic is that, well, I don't predict, but we just started last week a downturn. The question is, so I am positioned in Tesla to profit from the downturn. I'm going to ride it until it turns back up. I don't really need to predict. I'm just going to follow the trend. But monthly chart wise, we have nothing yet to go long. We have nothing yet on the weekly. We have nothing yet on the daily. So this is just not looking good for people that want to go long. Okay. Let me go to, okay, let me see here. How to find out implied volatility for a stock, implied volatility percentile, many different indicators. I trade options when I'm not sure how to track, not sure. Okay. Well, I do the VIX. The VIX is doing just that. It's looking at implied volatility in the options market. I think there is also, if you want to investigate it, I saw some. Is there implied volatility? Look at this. So on TradingView, and if you want to use that tool, there's a discount. There's an affiliate link in my description. So you have people that have created the implied volatility indicator. So TradingView is a platform where people can write their own code to compute things like that. So I don't know if these are any good, but this is just a suggestion for you. But I look at the VIX, and to me that's pretty much enough, because you know, if we have a lot of volatility on the S&P 500, it's gonna percolate to the Nasdaq if you buy on Nasdaq, and so on. So relative volatility index. So let me try it for fun. Okay, so see, this is the relative volatility index. I've never looked at it. So yeah, we see that it's looking similar. So here we had a big top here. So we had a small top here. We had a peak here, and it was also there. And here. So see, it's similar, but I find that the VIX is a lot more precise, because it's looking like a stock chart. You know, it's a lot more precise, and it's easier to make the trend lines to see, okay, yes, it's going up and down, because it's fluctuating a lot. But then you can do a resistance line a bit easier. So let me get rid of that. Okay, thank you for your question. Okay, another one. Ben, hello Ben. If the market does enter another large downturn, okay, how long might the trend take? Hoping to buy some cheap 2025 Tesla options, September 12. Okay, not sure if this dip will last long enough. Well, you should wait until the dip is over. And since you want to invest long term, 2025, so your outlook in terms of the span is, I would almost say, weekly or monthly. So in that case, you should be looking at the weekly chart or monthly chart of Tesla. And right now we just entered a downturn with Tesla on April 1st, and that downturn is going to stop when stochastic is going to come back up here. So you can let it ride a little bit, in my opinion. You can let it ride, because on the weekly chart we don't have a good stochastic either. So this is telling me that the wind is in the direction of the shorts. So you should wait at least until the stochastic is plateauing. If it plateaus, then eventually it's going to start to go back up. So you should at least wait until it plateaus. And once it's close to, 12 or something, when it's plateauing like this, then you can say that the trend has reached its lowest point. So then you can buy the calls that you want, and you will have been at the lowest point, and the options that you are going to be out of the money in with, I'm assuming you want to buy some out of the money calls, I guess, then they are going to be a lot cheaper because the stock will have been in the tank. So this is how you can approximate when is the right time to buy by looking at the weekly chart trend or the monthly chart trend. Okay. Where was I? So okay, sorry, no. So Dow Jones weekly is not there yet. So we are having a downturn here. So it's really possible that we start going back down to approximately 29,000 because, and I only say this because this is what the downtrend means. The trend is going like this. So, whoops, the trend is going like this. So the stock is going to bounce here. So we have bounced here last week or last couple of weeks, and now we could be heading to this low here. And if we go there fast, then it's going to be at 29,577. If we go slow, then it could be as low as 28. But this is the direction of the wind. I think I like this analogy, direction of the wind. We are looking at the direction of the wind. Boom. And if we go at the monthly chart of Dow Jones, the monthly chart is also bearish here. So, the whole market is bearish for now. The whole market is bearish. So this is why I'm positioning myself in that direction. You are welcome, Ben. You are very welcome. So S&P 500, see, they all have the same chart. They all behave the same. All of the stock indices are behaving the same, close to. So, big downtrend since pretty much the same date. A little bit later, the December 30th, 2021. So the only difference with S&P 500 here is that we have some support here. So it came down to support. So it's possible that it bounced back off of support. This is what support does. So support prevents the stock to go down. So sometimes support gets broken through and sometimes the stock goes back up. I cannot predict this, but if I see the stock bounce on support, then I might close my short position because it's bouncing. And if it's not, I'm just going to stay on. I don't need to predict, just need to observe. And the weekly chart for S&P, yeah, no, the same thing. We still don't have stochastic here. So, the market is not giving us any indication that things are going to turn around. On the opposite, it's giving us, we don't have stochastic on any time frame. And also, I need to tell you that we need to be mindful that on the daily chart, how can I put it? So on the daily chart, we can have a bounce here this week, but a bounce for a couple of days does not change much of the, let me just remove this. It does not change much the story. We could have a candle like this, so it means that on the daily, it's going back up. to a certain point, and then it continues down. So this is what's hard to understand from a wind current perspective, is that there's micro current on the 1 hour chart, a bigger current on the daily chart, bigger current on the weekly chart, and so on. So you know, if you look at Monday and you see this come up, you can say, well, Pierre was wrong and blah blah blah. He said that things were going down. Well, yes, but you know, we could be going back up for a couple of days like this, and then doing a couple of days like this, and on this weekly chart, it's only going to be looking like one big red candle that's continuing down like this. And sometimes you can have one whole week of the stock market going up, but what we care about is the trend, you know, and the trend might be here, it might be here, it might be here. We don't know yet because we only have one top candle and one lower candle. So yes, we can say, well, okay, it looks like it's going to be this, but in fact, maybe it's going to be something like this, and it takes a couple of candles to know that. Just like right here, you know, see, we had a top candle and we have this one here. So I made this line, and then we came lower down to here, we came back up here. So I was lucky here that this line held with just one candle. You know, it takes a few to kind of get a pattern, and we don't have that much here. So I don't know if I'm being clear, but this one could be it, or this one could be it. Okay, so S&P 500, nothing to see here, and Nasdaq. Let me go quicker because I feel like I'm always saying the same thing. So Nasdaq Composite. So Nasdaq Composite is a little bit different here because here we are still in the primary support, whereas in Dow Jones the primary support was here, and we have the second support. So if you follow me every single day, you will understand the difference between the two. But yeah, so we are still above support here. So there's a little bit of chance that we can bounce. And Nasdaq 100 is pretty much the same thing. And if I quickly go on the weekly and monthly, so weekly and monthly is still valid, still no stochastic, and monthly also no stochastic. So yeah, so if I summarize this, stock market is not looking super good. The wind is in the wrong direction. So just be aware of that. And if you follow me every single day, and if you follow me, and also every single day we are looking at Tesla and the indices. So we are going to look at the changes in current on the daily, the weekly, and the monthly, and everything, and the hourly very often. So we are going to be and know when things are changing. So this is why I am doing this. So thank you very much, guys, for your questions and comments. I always appreciate it when I have some people to talk to instead of talking to that camera right there. So have a great rest of the weekend. You can check out my YouTube channel, the Daily Trader, and hopefully I will see you tomorrow, Monday, for an analysis of Tesla stock. So thanks, and I'm gonna tell you